presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate your growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
again.
Thank you.
Now, Tom O'Brien.
Welcome to folks. Tommy O'Brien coming to you live from TFNN, 3:07 p.m. Eastern Time on Friday, and we got some action to the downside with markets pulling back in some holiday trading, whether you got some rebalancing going into the end of the year potentially. Been quite a year for the Magnificent Seven, and they are almost leading this pullback, right? You get the Russell down 38 points. That's 1.7%. So it's not just the Magnificent Seven, okay? But you do have the NASDAQ 100 off about 1.6% right now. You got the S&Ps off by 1.2%. The Dow in the red by about 0.8%. And let's just jump around to some of the Magnificent Seven. Apple shares. Now, the whole market's caught a little bit of a bid as we kicked off the 3 o'clock show. We talked about, right? S&Ps up about 48 points. Off of the lows when I was doing that update. So Apple catching a little bit of a bid, but you're still down by 1.5%. Microsoft off by 1.9%, and you've almost caught a bid of $4, right? You got Amazon off by 1.6%. Google shares off by 1.5% right now. Meta off more than a percentage point as well. Tesla off by 4.8%. I give them special attention just because they've been such a part of the run. Right, the part of the run recently from a valuation of 215 to 100% higher, still at this price level of 432. Remarkable the acceleration it's had. We jump over to yields right now. One of the stories for sure with the yields. We're talking about a 10-year right now. Where are we sitting? 4.62 and inching towards 4.63. As I mentioned, that small tail yesterday. Let's put it on a 15-minute. That was correlating to yields yesterday morning, approaching about 4.64. So we're right at the highs we've seen recently. And you put this thing on a weekly, right? Look at this critical area you're at right now. 108.13, lows earlier in the year of about a point lower of 107.04, so almost a point and a half. And then you got this 105 and change, which will correlate to close to a 5% yield on the 10-year. You jump over to the dollar, critical area in the same way when you look at things. Bumping up against the 108 level, holding above that level right now, barely at 108.03. You jump over to the VIX. All things considered, not that bad of a VIX with what you got going on. Look where we are. VIX just back to where you were on Tuesday. Okay, VIX just back to where you were at the opening bell. Not a lot of volatility premium in this market, even when you get a sell-off of 100 points in the S&P, just like that. That's almost a little worrisome in its own. Right? People aren't paying for protection, even when the market's accelerating lower. As Bloomberg puts it, stocks rocked by late week swoon in tech giants, okay? Now, some of the charts they have in here. Let's just jump to some of the interesting parts of it. That's just talking about the weekly performance, but how about this one? This is the Magnificent Seven. Bloomberg, Magnificent Seven Total Return Index. So, yeah, you're seeing some pullbacks today, but this index, made up of those seven, 70%. 70%. We didn't pull up NVIDIA. Shame on us. How can we not pull up NVIDIA on a day like that, right? NVDA down by 2.1%. All right, so you have NVIDIA down more than 2%, Tesla down almost 5%, all the other big equities in the Magnificent Seven down between 1% and 2% right now as the market rolls over. And as they go, the market goes. That's the other story I wanted to get to here, okay? S&P, best year since 2021. Look at this year. Yeah, you had a couple pullbacks, but man, not really. Not the trend is your friend, right? Higher highs, higher lows across the board. And yeah, last part I wanted to get to, it's been about 50% of the gains. I was looking for the quote. As those Magnificent Seven, you're talking about almost 50%. Nonetheless, they get hit a bit today, and we'll see where they go from there. We talk about treasuries. Yields on the rise. Treasuries trade mixed with a 30-year yield near 2024 highs as we come into the end of the year. Term premium getting rewarded. Higher for longer is in play here. Okay, you're looking at a term premium on the U.S. 10-year Treasury. Yeah, you're approaching the lofty levels we saw in 2023, and you're talking about higher for longer. We've been talking about the rates. We've been talking about that the market right now is pricing in 2 rate cuts next year. 1, 2, 3, somewhere in there, but 2, the most predominant one on a probability basis of what swaps are pricing in, going all the way out through December of 2025. The market looking for about 2 cuts. So, if this is the market adjusting to higher for longer, it's going to take a little time. My dad would say it'd be a slow bleed, right? The market's just not going to shock everybody to 5.5% instantly, because that would be difficult. If we're going there, and there's just place, we'll see how some of the inflationary factors play out in the next administration. But the next Fed meeting is January 29th, I believe, and the next administration is January 20th. So as traders, we got an exceptional time of volatility as the market. You know, the market does not enjoy variables or unknowns. And there's a lot of unknowns out there right now of how that could play out when you don't know how some of those policies are going to play out, whether it's tariffs, most importantly, or immigration, depending on how they all play out, because they all could be inflationary. And then where does the Fed go as a result of that, right? You jump over to gold. I talked about gold. So take a look at this. You jump over to the dollar, okay? The dollar from August 20th to October 1st, that's 6 weeks. Okay? That is 6 weeks on this chart. Middle of August to the end of October, you were pushing 100. You got within almost 1/10 of 100 on the end of September. Okay? You back it up to gold. You can see that gold was trading at 26.64 with the dollar at about 100. Now, yeah, you've had some volatility over that period of time, but we're trading within $15 of that price level. Meanwhile, the dollar from October 1st went from almost 100 to 108. And meanwhile, if you're pricing gold in a $108 today, it's worth almost the same thing as what you were pricing a $100 on October 1st. That is gold strength. Okay, and eventually that will translate into dollars if you get a pullback, but that's not going to happen anytime soon if these higher yields are coming at us, with the dollar sitting at about 108 right now. Almost exactly, right? 108.04, that huge acceleration when the Fed said higher for longer. 2 cuts next year, not 4 cuts next year, coming at you, and we'll see where they go from there. All right. All right, folks, stay tuned. We'll come back. We'll talk some other equities. Yeah, we got a couple news stories up there pulled up. We'll see what's going on in the market and holiday trading. Friday, coming into late December, last weekend of the year. Stay tuned. I'm coming back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got markets in negative territory. Just lulled into this one. So, credit card debt set to hit record levels as consumer holiday spending rises. You talk about December spending? Yeah. How about almost $1 trillion? Let's round up, okay? November 1st to December 31st, so 2 months, okay? But holiday tradings, they call it on track to reach a record of $979 billion to $989 billion. But guess what? Some of that portion going on credit cards. And when you look at the credit card number, $770 billion when you had some Americans using some of the stimulus, right, to pare that debt from $930 down to $770. And since then, though, what is that, $433 billion. You know, it's funny, $433 billion. That's Elon's net worth almost these days. Everybody's credit card debt that's been added since 2021, or Elon's net worth. I know, staggering. I just heard that. He's at like 468 billion. Nonetheless, that can't go on forever, right? Can't go on forever. And that's a almost 45-degree angle to the top right for credit card debt. We're almost at 1.2 trillion right now. And that's a problem with yields, interest rates, where they are, right? Yeah. 28% of credit card users had not paid off the gifts they bought last year. So 1 out of 3 people are carrying debt from last Christmas almost. Yeah, and it's a tough one, as we all know, with credit cards. All right, we talk a little bit of Netflix. We talk a little bit of Christmas NFL cheer. Well, Netflix getting hammered with the market today. But they put up some big numbers, man. So for Christmas, how about 65 million people turning into the 2 games? And my friends and I were talking about, they just weren't competitive games. That peaked out on the Beyonce halftime show. 24.3 million was the peak there, and 24.1 in Kansas City. And there it is. It peaked out at 27 million. Let's see. They averaged. That is quite. I'm saying peaked. Averaged 24 million on the first game and 24.1. And they peaked out at 27. Pretty amazing to average 24 and peak out at 27. Right? Does that make sense? Usually the peak will be far above the average, I guess. Pretty steady line. Nonetheless, you compare it to the NBA. NBA had a big day as well. Record for its most watched Christmas day in 5 years, 5.2 million viewers per game. Pretty staggering when you put that in context. You compare it to the NFL, right? Big day for the NBA on Christmas. They get about 5 million. The NFL on Netflix gets about 25 million. Yeah. So let's see. LA over Golden State, most watched NBA regular season and Christmas Day game in 5 years. 7.76 million viewers and peaked at 8.32. Yeah, that's a staggering number that the average is so close. What, everybody just puts it on at the beginning of the game? I would love to see the numbers that show an average of 7.76 million viewers and a peak of 8.32. You'd have to start pretty high, as in you can't trickle up from 1 million to. Everybody starts watching the game almost at the same time, and it's a flat line with very little volatility. I don't know. All right, what else we got pulled up this market? Yeah, we could talk tariffs. We've talked tariffs, though. We've talked the Magnificent Seven, the S&P, and we talked Netflix and credit cards. Yeah, let's talk a little bit of Disney. This is the first year since 2019 that Disney's hit the $2 billion mark. And 2025 and 2026 are setting up to be some big years for Disney. Well, maybe we'll pull up later in the program. They're going to have some avatars. They're going to have some Star Wars. I think 2019 is the last time that we had a Star Wars. And you're going to get 2 or 3 of them coming down the line in the next 3 or 4 years. Quite the acceleration for Disney. A couple times this year. Today, though, with the market down by about 1%. Jump over to Warner Brothers. Down about 0.4% for Warner Brothers. You jump over to Paramount. Is that Paramount? No, CBS. What is... All right, let's just jump around. Going to be an interesting 40 minutes to finish this with some light trading as the market rolls over a bit. Look at that, right to the 50%. And you put this thing on a daily, man. We get some big volume coming in today across the board. You know, I was highlighting it. Look at this volume. This was, I was looking at one of my dad's webinars today that we still have available and under the services for his Timing the Trade webinar. And somebody had purchased it recently, and so I was just looking at it myself. And I was looking at the section he was doing on quality volume, right? And it looks exactly like this, folks. It did. I was watching the webinar, and I happened to have the market up, and I was looking, and, that's the definition. Now, this is holiday trading, okay? You want to get some more clarity here. We're getting some light movement across the board. But there's your definition, man. Look at the volume on the way down on this spike on November. Accelerations. We go up on the period of light volume, right? You get the acceleration, to the downside. We fade on the lightest volume possible, coming into a half day on Christmas Eve. Now, that's a half day, all right? You do 582,000 on the futures, but, you pull up. So that's the S&P futures, but you pull up the SPY. Yeah, look at this volume. Okay, now you could say that you're potentially rejecting that. Okay, you'd want to come down on lighter volume, reject that price. But boy, look at the volume lull from November 15th, you get a spike, right? And then look at this lull that we got up to almost 610 on the SPY. And then kaboom, just like that, we're at 593. And the other thing that's out here is we are not that far from where we were prior to the election. On the SPY, you were at about 576. So we're talking about what? 16 points. You're talking about only about 2 to 3% higher since Trump was elected. This market is skittish with everything going on. You think about the tax cuts, you think about the deregulation, and you think about the market being 2 or 3% higher. So get your spikes back up on that back, because the VIX in particular, back to where we were this morning, almost at a historical average at 1656 with the S&Ps negative by 84. Let's see how that plays out. And we keep our eye on the dollar. We keep our eye on yields. Yeah, sitting basically. Check in on silver. Silver below $30. Take a look at the daily on silver. Yeah, that 32 area. We're well off that price point right now. And look how we may just break away from this $30 area. We're $29.92. Longer term on silver. Yeah, look at that area 32, man. Gold contract looks like it might just be going back to 2,600 right now. You put gold on a daily. All right, same thing. Light holiday trading. You're going to get some light volume here. We definitely had some volume on the low side, coming down to 25.50. Again, you got this huge volume day on November 25th to the downside. But this area here, you can see. that since about December 13th, we've come into holiday trading. We've been light, and we've been holding up somewhat well, even as we chop around at 2,600 to 2,650 right now, almost right in the middle of that range on gold, trading at 2,630. But yeah, S&Ps, look at that volume. All right, look at the volume on the downside, middle of November. Look at the volume early November even, right? You got that acceleration the day after the election. But on this chart, outside of November 6th, can't deny that, day after the election, we got quality volume to the downside on this chart, on the S&Ps. S&Ps off by 1.3%. NASDAQ 100 off by 364. Stay tuned, folks. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's off by 81 points right now, trading at 6,013. Still a pretty lofty level, right? 6,013. You come in, and we only got 2 more trading days after today. Markets open for a full day on Monday and Tuesday, closed on Wednesday for the first, and we're back for Thursday and Friday. Next week, still in the realm of holiday, though. You still got kids off school. You got kids off school, you're right around the holidays, you're going to have lighter market participants across the board, for sure. All right, you talk about gambling, you talk about trading. We got a couple out there. This one, so Kalshi and a couple others out there in terms of ones trading on unregulated, Polymarket, et cetera, sites, et cetera. But nonetheless, they're talking about whether you're talking about contracts on the notable accused killer of the United Health Group CEO. Now, what's remarkable about this story, okay, now this is from Bloomberg. When was this out? This morning, okay? And what they talk about here is that you have Kalshi that just won their challenge to be able to offer contracts on politics right ahead of the Trump election, okay? And they listed contracts and wagers having to do with whether the suspect would be extradited to New York, whether he acted alone, and whether he would be convicted or pled guilty. 2 days later, they halted them, telling customers it made the decision after receiving notice from our regulators. What's remarkable here is that they can self-certify, okay? And this is where you're going to see this happen over and over, okay? The CFTC sought earlier this year to block Kalshi from offering bets on the election. They faced legal setbacks after a U.S. appeals court lifted the stay. The court is set to weigh in on the CFTC's authority to permanently stop these contracts. It's not surprising that activities that are enumerated and potentially prohibited, okay, are going to be at the forefront of their agenda. But here's the kicker. Contracts can go live if an exchange merely files a self-certification by the close of business on the preceding day. So you file a self-certification by the close of business today, you can go live tomorrow morning, and they don't have time to stop you before they go live. Think about that. Due to the time constraints, the agency can't stop self-certified offerings before they go live. How is this how it works? Seems like they're probably going to have to get control of this in the wild, wild west. Now, there's two sides of it, okay? There could be one side, which I definitely fall on, which is that you should have a right to gamble your money if you want to, okay? And you say all things within reason, for sure. But you should have the right to do that. Everybody does. It's just whether the state's getting enough of their piece of the pie, okay? We have the Hard Rock in Tampa. We have legal sports betting now in Florida through the Hard Rock online applications. You've always been able to gamble online on horse betting. It's a perfect segue to this one, which is if you're ever going to buy a lottery ticket, it's always good to be able to buy one when the prize pool is in excess of $1 billion, as Mega Millions tonight is at $1.15 billion. Okay? But I see a real slippery slope, for lack of a better term, because I'm not a big fan of slippery slopes, okay? But it's a very slippery slope when you allow people to bet on whether the state is going to lock people up in a box, because you could see how when you start rewarding wagers for financial incentives for incarcerating other citizens, that can go awry. And, not to digress too far, but that's where private prisons are a tough one, because, to privatize companies that are incentivized to grow the population, and we need prisons, okay? But you can see how that perverse incentive, right? It's a perverse incentive to a certain degree that nobody should be incentivized to have the biggest population of prisoners possible. Nobody should be incentivized on a financial incentive basis. So they're going to be dealing with this. There's no 10-day review period like the SEC has, because they're dealing with the CFTC, okay? Not the SEC. Big difference. They can just self-certify them. And yeah, since they won that, this is just exchange Kalshi's filings of how many different contracts? 225 of them since they won that. Yeah, and guess what? More companies are coming online. Yeah, from the CFTC regulated, like Robinhood Interactive Brokers, Forecast X launched election-themed trading earlier this year. I don't understand how that. Can you imagine that? They can just launch whatever they want, and then they can pause those, but they do still trade at overseas accounts. They talked about here. Yeah, still being traded on unregulated exchanges like crypto-only Polymarket, which says it has excluded U.S. users. Of course, they're going to be outside of the purview of U.S. regulators, right? That's always going to happen. But yeah, you can gamble money everywhere, folks. And I was listening to a great Bloomberg segment. All right, I was listening to a great Bloomberg segment. First off, on gambling, okay? And I hope I get it. I think it was New Hampshire. We're the first state to offer gambling, a lottery, was New Hampshire. First state to offer scratch tickets? Come on. Where's the usual culprit? It's Massachusetts, folks. The scratchies. You got to get your scratchies. More money spent per capita than any other state? Massachusetts. Good old Massachusetts. But here's the kicker. Money lost, okay? The amount of dollars lost per capita is not Massachusetts, even though we gamble more per capita. But Massachusetts, we like to reward our gamblers, right, to keep them going. So the payout is higher versus Rhode Island that keeps 60% was the number they put out, I believe, that they keep of the lottery. So Rhode Island, every Rhode Island resident loses, I think it was $300 a year. The highest loss per capita is Rhode Island, because they really give it to you and take more of the prize pool in Rhode Island. Yeah, interesting. Good old New England. They don't understand it. I tell you, hey, let me tell you something, though. You go into a 7-Eleven in Florida, Florida knows how to gamble, too. Not always a good thing, though, as we know. But guess what? 1.15 billion, folks. You want to go get a ticket today. Today's the day to do it. And if you don't want to pay any state income taxes, find yourself in one of these 9 states. California, Florida. 8 states don't have lottery taxes, okay? Not state income. California jumps out and ruins that. Don't tax lottery winnings. What's up with California not taxing lottery winnings? They tax everything else, right? Crazy. How's that play? Florida, New Hampshire, South Dakota, Tennessee, Texas, Washington, Wyoming. No lottery taxes. That's a big number when you're talking about $1.15 billion. All right, folks, stay tuned. We'll come back. We'll talk some stock equities. We'll go over some charts. We got 22 minutes left in trading of the week. We got the S&Ps negative by 86 points, or 1.4% in the red. I'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Been quite a week for Honda Motor Corporation. HMC, you're up another 1.2% today. You put it on the daily, and yeah, you're talking about Honda, that they are in merger talks with Nissan, and yeah, the stock just continues to rise, man. You're up from 23 to 28. You're up more than 20% this week, and that run continuing. And what is interesting, right? You look at the volume, man. You spike lower on that volume. They said we got to do something, and man, they've done it. And you might actually get more volume, which is remarkable when you look at the pullback you had. And yeah, we're at 13.9 almost, and we did 14 million last week for Honda on the downside, and you're catching a bid by 20% this week. You take a look at this thing on a longer term chart, pretty remarkable, right? You look at that company like Honda, back to 2005 prices 20 years ago, just like that. Remarkable. We jump over to Bitcoin. Off $1,300 for Bitcoin. We put it back on a daily, going back a year. And, you know, we've been holding the highs pretty well right now. Yeah, you're off of 109,000, but you look at this chart, right? We got basically no pullback at all. Here, let's activate that. Let's get it. Excuse me. Oh, come on. One more. Okay. I can, here, we're going to delete that. And let's see what we're dealing with. The point being, this is just a healthy pullback, okay? We're barely at a 236. You think you can run from 52,000 to 110,000 over the period of 3 months and you might get a little volatility? Of course you can get some volatility. The 382 brings you back to 87,000. A 618 would fill the gap from the election, okay? I'm not saying you're going there, but they're healthy pullbacks. Even on a longer-term bullish move on Bitcoin, you jump over to MicroStrategy. Yeah, be careful, man. Down by 4%, off of the highs of 543. I couldn't help but start talking about this equity back in the beginning of November when this thing ran from, you know, the election at 250 to 543, and you're dealing with multiples well over what they own in Bitcoin right now. They're a volatility play in a very volatile underlying instrument like Bitcoin. And you got to remember that this equity went from 43 to 543 this year. If you're out there trading it, kudos to you. You've probably made some money. But Bitcoin only tripled in price this year. And MicroStrategy was a 12-bagger. What's that going to mean on the downside? Well, we've already cut it. But you're still at what, an 8-bagger? 6-bagger? Yeah, you know. So be careful on that one. As you look at this chart, you talk about a rejection, a higher price, man. From 543, you wipe it out. I'd say the next stop is probably 265, back to where we were at the end of October. Pretty remarkable. Look at that. So that's the day following the election, is 260, which is remarkable when you think about the run it's had. Compare that to something like Tesla, which you're talking about from 332, $100 higher at 429, down by 5.5%. Jump over to NVIDIA shares, down by 2.5%. AMD, almost flat right now. You jump over to Intel shares, down by 1.1%. All right, a couple other articles I pulled up talking about what are we looking at in 2025. Yeah, ad revenue. Well, they're talking about stabilization. You just saw the numbers that I talked about earlier in the program in terms of Netflix, right? Biggest numbers ever on streaming, 65 million watching their programs. NBA, biggest numbers out there as well. Seems like the ad dollars would go with it. Sports and live events, yeah, reign supreme. They continue. That's the deal, man. You know, everything is the deal but ad dollars. I found myself, I told you, I just switched to an ad-supported Netflix. It just seems like a waste, right, to pay for no 15-second commercials because it's expensive. If it was 50 cents, I'd probably say it's worth the 50 cents not to see those annoying ads. It's not 50 cents. They give you quite a discount because they are making quite a lot of money in advertising. Yeah. Overall, the global advertising industry expected to surpass $1 trillion for the first time this year, excluding U.S. political advertising. It's going to grow in 7.7% into next year to 1.1. How about that, right? Advertising. TV expected to grow 2% to $169 billion. Pure play digital, that excludes the digital extensions of traditional media, like streaming, but includes platforms like YouTube and TikTok, $813 billion, right? TV, $169 billion. Pure play digital, which does not include traditional media when you're talking about Warner Brothers, their streaming, doesn't include it, right? Doesn't include Disney to the likes. YouTube, TikTok, Facebook, probably in there, right? You're talking about digital, got to be $813 billion. And how about sports? Commercials during live sports, 24% more engagement. I'm surprised it's that low. Think about how mind-numbing most ads are, right? You're just so tuned out. It's amazing how so many advertisers pay for so many ads that we've accustomed ourselves to tuning out on. So when you get that engaged viewer for a live video that you have to be watching, yeah, that's why NFL and NBA teams are worth an ungodly amount of money right now. Yeah, they talk about cutting the cord, but nonetheless, advertising. All right, we talked some real estate coming in. How about this one? 15 major cities where home prices risen the most. What was the biggest one out there? Anaheim, California. Newark, New Jersey. Newark, New Jersey. Another New Jersey in there. New Brunswick. Nassau County, New York. Providence, Rhode Island. They're getting taken to the cleaners by the lottery. That's all right. You got some Florida cities in there. West Palm, Chicago with almost an 9% rise. Detroit, 8.5. San Jose, Fort Lauderdale, Milwaukee, Seattle, Miami, Cleveland, and Warren, Michigan. Rounded out. Pretty remarkable that you got rates locking where they are and you have home prices where they are as well. Inflation is still here, and that's part of it. Asset prices, I mean, that's one of the reasons why I think gold is holding up so well, right? Inflation's present. You're seeing the Fed higher for longer. Gold holding up very well because it's a store of wealth. When there's a rush to dollars, there's a rush to gold in the same way right now with inflation where it is and real estate to the same degree as well. You jump over to some of the home builders, right? Not been good times since the election for them. There was the prior to the election day, November 5th, from 176 to 137. Now, they're dealing with woes beyond tariffs, okay? D.R. Horton, same story, though, man. Yeah, you talk about China and these home builders and rates where they are, market's a little worried right now. Look at that one. You break below here on D.R. Horton, man. Just from a pure technical play, you break below here. You got this high from 2023 hanging out there at 132. The low from earlier in the year, 133. And the low we had, look at that, nice round number on man Basil Chapman, 135. All right, we got 10 minutes left to go in trading. We got the markets trying to get back into some less red territory. S&P's negative by 75. We got 10 minutes left in trading. We got one more segment. Don't go away. I'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps catching a little bit of a late day bid right now, as in still negative by more than 1 percentage point, but on a 5-minute basis, look at this volume coming in towards the end of the day, the end of the week, holiday trading. You just did 43,000 contracts. You see, dwarfing anything else we did. Market popped a bit. We hit the highs we had at about 3 p.m. We've trailed off, and now we're negative by 1.2%. NASDAQ 100, you got a little bit of a bid with some buying in volume as well. But the bottom line is, on a daily basis, man, you got some volume coming into the markets on the downside right now, and you're going to be coming back in to where we were on December 20th. And yeah, you're coming into that bar as well. And the S&P is negative by 74 points. We keep our eye on the dollar, and that's where we're going to finish it up. A lot riding on the dollar as we come into 2025, as we sit right at 108 on the dollar. And you jump over, dollar, ICE's best year in almost a decade. Yeah, you talk about it, man. And we are, right? A couple weeks ago, was it, where you had the ECB cutting to 3%. We're at 4.25 to 4.5. The ECB is at 3%. The Swiss National Bank surprise 50 basis point cut, right, to 50 basis points. Again, we're at 4.25%. The Swiss National Bank is at 0.50%. My best friend living over there in Zurich talking to me about getting basically almost 0%. I think it was under 1%. It was either 0.5% or 0.9% for a 30-year mortgage as a resident, soon-to-be citizen. I believe my buddy is Switzerland. He's been over there long enough. But yeah, you look at the run. How about it, man? It has been quite a run, right? Up by 7.4%. So this is why I talk about quite a banner year for gold when you look at the run that the dollar has had, right? The dollar gauge, the best year since 2015. Now, we had quite a year in 2022 as well. But yeah, quite a run for the dollar as it sits at 108, and we finish it up with gold, all things considered, right? Look at the year gold has had in the context that the dollar's had one of the best years it had in a decade, and that's what the chart of gold looks like. Folks, thanks so much for tuning in, and have a great weekend, a safe weekend out there. We'll see you back here at 9 in the morning. I'm going to do this 4 o'clock update, and we'll see you Monday, folks. Have a great week.